Hello everyone, I'm Roland Kym bringing you the November 2025 update on Vancouver real estate market. Whether you're a past client, a friend, or in my sphere, or just curious about the current market, thanks for tuning in. This month's data shows a continuation of the buyer-friendly conditions we saw in October, with sales remaining subdued, inventory plentiful, and prices inching downward. Let's dive right into the numbers and see what they mean for you. So on the market snapshot, let's first look at the overall activity. In November, we saw 1,846 homes sold across Metro Vancouver. That's a 15% reduction in sales versus the 2,181 homes sold this time last year. And that's a 20% reduction below the 10-year seasonal average of 2,324 sales that we typically see. So, sales continue to lag behind both last year's pace and long-term norms. Now, on the supply side, there were 3,674 new listings in the multiple listing service. That's a 1.4 fewer listings than last November, but it's 3.1% above the 10-year average that usually sits around 3,562 active listings. Sellers are still listing homes at a slightly higher than normal rate, even as buyers' demand is softening. The total number of active homes for sale in our inventory has stood at 15,149. That is a 14% higher than 1 year ago and a striking 36% higher above the 10-year average, which usually sits around 11,116 active listings. So in other words, buyers have more choices than we've had in November in recent memory. One way we gauge market balance is by the sales to active ratio, the SNLR. In November, the overall SNLR was 12.6%, with a ratio of 9.7% for detached houses, 13.6% for townhouses, and 14.8% for condos. Analysts generally see ratios below 12% as a sign that prices could come downwards more, while ratios above 20% hint at some upward pressure potentially building. With most segments hovering near or below the 12% threshold, the buyer market remains tilted towards buyers. The Greater Vancouver economist Andrew Lees notes that many buyers are continuing to sit on the sidelines while sellers are subduing their expectations. He's expecting that will change in the new year. With interest rates expected to stay steady, chief economists on multiple banks, multiple platforms are thinking that the interest rates will no longer go further down, they will go sideways, and that will cause new buyers to enter the market in early 2026. Talking about pricing, the composite benchmark price, which represents what a typical home price across all property types could be, is sitting at $1,123,700, which is down 3.9% from last November and down 0.3% versus October. Even with that decline, it's worth noting that the composite index remains 30% higher than it was 10 years ago, illustrating that Vancouver remains a long-term resilient market for real estate. Regarding detached houses, sales totaled 541 units, which is down 13.6% year over year. And the benchmark price for a detached home sits at $1,900,600, which is 4.3% lower than last November and 0.4% lower than October. And over the past decade, detached values are still up 35%. Townhomes saw 350 sales take place, which is a 22.4% drop compared to last year. And the benchmark price for a townhouse is $1,065,600, which is down 4.4% year over year, but interestingly up 0.1% from October. Long-term home values have appreciated significantly because prices are roughly up 94% higher in the townhouse market versus a decade ago. Condominiums recorded 945 sales, which is down 13.2% from last year. And the benchmark price for a condo is $714,300, which represents a 5.2% decrease year over year and a 0.2% decline over last month, October. Even so, condo values remain about 73% above where they were 10 years ago. So these numbers show that while prices have softened recently, the long-term trajectory remains upward, especially for attached apartments. Several factors are shaping up in November's market that is going to draw out the balance of the year and indicate where we will go in 2026. High inventories with cautious buyers, active listings up 36% over the 10-year average, and buyers have the luxury of choice and time. This reduces the competitive pressure and allows them to negotiate more aggressively. Steady borrowing costs. The Bank of Canada's earlier rate cuts have been digested by the market, and no further cuts are anticipated in the near future without a drop in borrowing costs to spur demand. So probably in 2026, there's a more likeliness of several interest rate holds and eventually an interest rate increase in late 2026, 2027 versus any further reduction. November is typically quieter, and December often sees even fewer transactions. The combination of holiday season distractions and economic uncertainties that we're currently facing means that both buyers and sellers may delay major decisions until the new year. So what does this mean for buyers? If you're in the buying market today, these conditions work in your favor. More inventory means less competition and more room to negotiate. Prices are slightly lower than last year across all segments, and long-term trends suggest that Vancouver real estate continues to hold really strong value. Make sure you get pre-approved for your financing and be ready to act when you find the right property in a market with many other options being available. That allows you to, have lots of options to choose from. What does this mean if you're a seller? Selling in a softer market requires strategy. Accurate pricing is crucial. Aim to list near recent sale prices of comparable homes rather than hold out for last year's highs. Presentation is also key. Staging, professional photos, curb appeal will all help your property stand out. And finally, flexibility is important. Be prepared to negotiate on price, on terms, on dates, anything that is important to reach a deal with the buyer. Remember that despite short-term dips, Vancouver values have risen substantially over the past decade. So has your equity grown if you were in the market. And looking ahead, as we head into December and into the new year, expect activity to remain muted. Inventory may shrink as fewer owners list their homes during the holidays, but buyer demand could remain cautious. Without a significant economic shift or a change in macro factors or interest rates, prices should stay fairly stable or soften modestly. Neighborhood dynamics vary, so it's always wise to look at specific areas than the broad averages. To sum it all up, November 2025 continued the trend of slower sales, higher inventory, and modest price declines. For buyers, that means opportunity. For sellers, that means you got to be clear and have aligned expectations. Vancouver's real estate market continues to be an amazing place to be invested and live. And if you have any questions relevant to what your situation is, I'm always just a phone call away to sit down with you and figure out how I might be able to help you. To sum it all up, I wish you a Merry Christmas, and I'm always just a phone call away.